everyone, welcome back to TechnoChart's YouTube channel, and in today's video I am going to talk about some few multi-baggers that are trading at support. Now these are the stocks that are trading near the weekly support and which have been proven multi-baggers from a long period of time. These have given a humongous amount of returns in the past period, and but this does not guarantee that they will continue to give that return in the coming future. So let us discuss now about the few technicals about these stocks and what could be the buying levels, what could be the stop loss, and what could be the targets in the coming 3 to 6 months. Now let us look at the chart of Tata Consultancy Services, that is TCS. So if you look at the weekly chart, you will see that the stock is now taking at an important support, right? So if you look at this chart, you will see that first this was an resistance area at 3400 rupees. If you can see, the stock tested this area three times here, and now finally it is now acting as a support, right? So if you look at this chart, you will also see a double top pattern at this level. This will only get validated if the level of 3400 rupees breaks on the lower side on the weekly time frame. So in that case, the next important support that I would see on this chart is at around 3000 rupees, which will act as an important support. Yes, definitely this will take support, minor support at this levels also, but the major support what I see is at this level, that is 2800 or 2900 rupees, right? So this is a good level to accumulate Tata Consultancy Services, but definitely you should keep a stop loss. If the overall market condition is weak, then definitely you'll have to exit and enter again at lower levels. So the second chart that we are going to look forward is of Dixon Technology. Now if you look at the chart of Dixon Technology, you will see that the stock is now in stage 3 down, stage 3. Yeah, definitely the stock has is at very important support, and if the support gets broken down on the closing basis, that is of 3900, then we may see a level of 3500, and after that if 3500 also breaks, then definitely the downside will be huge. But if the market conditions are supporting the stock, then we may see a good rally in this till around 4700, that will be the first level, and 5700, that will be the second level, right? So in any case, your stop loss should be at around 3400 rupees only. If you are accumulating this stock, do not buy in a single go, and try accumulating like 1 or 2% on each and every 4 to 5% fall, so that you do not go aggressive into one single go, right? So if you buy at around these levels, then your stop loss should be at this level only, and your target should be 57 4700 and 5700 for the shorter term. The third stock that we are going to look forward is about IRCTC. Now, if you look at the chart of IRCTC, you can see that the stock is now taking multiple support at around 700 levels. So this has become a very important zone for IRCTC, because if the level breaks on the downside, then definitely there are no good major support if you in this chart. The next level that would be at around 550 rupees, and that too, that will be a very big downfall in this particular script. So if you look at this chart, I would suggest you to accumulate this stock for a longer term, so that you can have a average buy price of around 700 to 7 at around 700 rupees. So you can buy this stock at each and every dip till it holds 700 rupees on the closing basis, right? So stop loss is really important. 700 rupees that I have marked is a very important level to hold it for the uptrend to continue. If 700 rupees breaks on the lower side, then definitely the stock is going to head much lower in this particular script. The stock is now forming a new base in this. What does a base mean? Base means whenever a stock is trading between resistance and support, that will be known as a basing structure. And finally, the stock, when it breaks out, then it will be known as a breakout of a base. So here it is trading between support and resistance, that the support is at around 700 and the resistance is at around 920 rupees. Then this is a good stock to accumulate for longer term, as it has been a proven multi-bagger. Now the fourth stock is Tata Power. As you can see, Tata Power has a strong support at around 200 rupees. You can accumulate Tata Power for 250, 260, 270 rupees for the short term targets, with a stop loss below 190 rupees. Now you can accumulate Tata Consumer at from 200 to 220 rupees. anywhere between these levels, this is a good level of buying for long term also. But remember, if this breaks on the lower side, if the level, or if Tata Power closes below 190 rupees, then this would be a problem for even for long term investors, because then the downside will be open, because as you can see there are no major levels to hold this particular script till, I would say, 175 rupees, right? So here the downside will be very swift in this, if it breaks this level. So keep that in mind before entering into trade. So the fifth stock that I'm going to talk about is Tata Chemicals. Now, if you look at the chart of Tata Chemicals, it has broken out of a resistance at around 800 rupees. As you can see, let me highlight it in the chart, where you see that the stock had a very important resistance at this level. Now, after breaking out of that level, the stock has taken support here once and rallied for around 20%, and the stock is now taking multiple supports at 800 levels. So as you can see, 800 has become a very important level for Tata Chemicals. So also you can see a lower high at this level. So in any case, if 800 level is broken on the closing basis, then you may see a good downside till what level? Let me mark it in the chart. You will see a good downside till 670 level, because this, after this support, this is the only major support that you can see in the chart, right? So this is also a proven multi-bagger in the past and now trading at an important support. So keep that in mind. If you are trading, if you are buying the stock, you should not hold this stock below 800 or 790 rupees to be safe. And yeah, so the final stock that I am going to talk about is Reliance. So if you look at the chart of Reliance, you will see that the Reliance has broken out of a VCP pattern. Now, what was VCP? As we had discussed in the last video, whenever a stock is breaking out of a VCP, that means the price is contracting in a smaller range, right? So if this is the particular structure of a VCP, where the first uh, bottom is made of around certain percentages, and then the fall reduces gradually. So in this case, you can see first, this was the first base, this was the second base, and this was the third base. Let me highlight it. So this was the first base, this is the second base, and this is the third base. And finally the stock has broken here on the closing basis, right? So if you look at this chart, the stock is now taking, or Reliance is now taking support at around 2200 rupees levels. So 2200 has become a very important major support in case of Reliance. If 2200 gets broken on the closing basis, then we may see a good downside till 2000 and 1850 rupees. So 1850 rupees is one of the most, the strongest support of Reliance. So one may start accumulating this. If you are only looking for long term, then one may start accumulating this till 1800 rupees level. But if you are looking for swing to positional basis, then I would suggest you to keep a stop loss of 2200 and be in this trade. So a disclaimer, I want to suggest everyone to use stop loss in each and every case, because nowadays the market has gone really weak, and we are, as we have opened gap down many times till now of around 2 to 3 percentage, right? So I would suggest you to keep stop losses and try not to buy aggressively in any case, because you will get ample of opportunities to buy. Now if you like the video, do share it with your friends, and please subscribe to my channel, and thank you.